Alright guys, so let's talk about Trump's economy today. So the CPI report is out and it took everyone by surprise. Now everyone expected US inflation to rise like the previous month. After all, everything Trump is doing today is highly inflationary. When you hit the world with a tariff war, prices will go up and consumers will be paying the tax. Economics 101. Does that mean there's no recession coming now? Are we now headed for greener pastures? And this is where we really need to look at why inflation really fell. Now, headline inflation has fallen from 3% to 2.8% for the last month. Core inflation is also down from 3.3% to 3.1%. This is a slight drop and it's easy to think that the worst is over. Now, when inflation drops, everyone is happy, especially Wall Street. And the underlying psychology is simple. If prices comes down, this will force the Federal Reserve to cut interest rates. And when rates goes down, it's bullish for stocks. And once again, everyone is betting on lower rates to raise asset prices. The Federal Reserve themselves have confirmed the market sentiment. There are two types of rate cuts. The first comes when the entire economy collapses, and that's what happened during the recessions in '08 and 2020. Interest rates were slammed down to save the system. But good news reductions are what we want, where inflation is returning to 2% without the entire system crashing down first. It's easy to assume what we are seeing now is one such example. It's why stock prices have rallied almost immediately after the CPI report. Everyone thinks that we are in the clear, but it's important to remember this CPI report is for February 2025. Trump's tariffs have not gone into effect just yet. Throughout January and February, we had Trump proclaiming his list of tariffs to the world. He was jawboning to the global economy, but the majority won't take effect until March. While China's 10% tariff started last month, the big ones have just taken effect in March this month. We have a 25% tariff across the board hitting Canada and Mexico. An additional 10% tariff on China is in effect as well, and this brings the total punishment to 20%. Trump has started his trade war with his biggest trading partners. And when you impose a tariff, there will be an adjustment period where higher prices takes time to feed into the economy. Imports could try to absorb the cost initially, importers, but if it's too much and margins are squeezed enough, they would simply pass it on to the consumer. But why has inflation dropped in February? It's because of Trump's tariffs and it's not what you really expect. In January, US consumers began front running Trump's tariffs and imported more from Canada. Exports to the US surged by 7.5%, driving the deficit higher by $2 billion. And here's how desperate US consumers were. Auto exports jumped by 12.5%, while consumer goods rose by nearly 8%. And the same thing is playing out with Mexican and Chinese imports as well. US consumers are rushing to import before Trump's tariffs come into effect. Why? Because goods made in the US are much more expensive than foreign imports. And this is where supply and demand comes into play. If a flood of cheap foreign imports comes in, local producers will be forced to drop their prices to stay competitive to sell their goods. It's a big reason why CPI fell in February, and next month CPI could continue to fall indeed. But the real shock might come in April, especially if Trump continues waging his senseless trade war. Now, as we speak, Trump has officially imposed his global steel and aluminum tariffs to the world. Every country that exports steel into the US will face trade barriers. Metals is a business with low margins, and the only way to make money is to export your products in bulk. A 25% tariff is enough to wipe out any profits and cause foreign suppliers to simply back away from the US market. Now, that might be good for US producers. Since competition has disappeared, domestic steel mills they can raise prices to the moon, and it's already happening. Take steel prices in the Midwest, for example. In just 2 weeks, prices jumped by 12% for hot rolled coils. And since Trump took office, steel prices jumped by 20%. And this was just 3 weeks back. Now imagine how high steel prices will go with Trump unleashing his global tariff war on global exporters. Prices could surge by another 25% because domestic producers now have the pricing power. It's great for their bottom line short term, but who does it hurt? The consumer themselves. And sooner or later, this pain will be reflected in the CPI. We could see a serious resurgence in US inflation. So even if the markets rise, this might just be a temporary reprieve, the calm before the storm, a moment of silence before the real carnage registers on the CPI numbers. And if the US consumer was so robust and strong, they would be able to absorb the tariffs. Importers would be more than happy to shoulder the additional tariff. But we have the exact opposite happening. Walmart is begging their Chinese suppliers to slash prices in response to Trump's tariff war. And needless to say, they received a big scolding from their suppliers. Beijing wasn't happy. Chinese margins are already being squeezed, and honestly, what incentive does China have to subsidize the United States, especially when Trump is doing everything he can to contain its economy? It's not going to happen. That means it leaves the US consumer with a higher inflation bill. And when inflation rises enough, we will see people start to spend less and less. People are already feeling the pinch. Across the board, the outlook for the future is not looking bright, and that drives how people will spend their money. Since January 2024, inflation expectations are rebounding. People are expecting inflation in the next 1 to 5 years to stabilize at 3%. In other words, no one believes that the Federal Reserve will win the inflation fight. Expectations drive decisions, especially for the Fed. And if people continues to expect higher inflation, cutting rates down in a hurry is going to be very difficult. And that's why Trump's trade war is just so deadly. He's pouring fuel on a fire when people are already extremely nervous. When you decide to wage an economic war with your biggest trading partners, you are courting disaster. Now, Trump doesn't understand the risk he's putting the US economy in. Or maybe he does understand, and he's still willing to plunge the US economy into recession. In 2023, the US imported more than $1.3 trillion worth of goods from Mexico, Canada, and China, and that's more than 40% of their total imports. This includes both finished goods that consumers directly buy to use, like computers, TVs, and furniture. Input costs for US factories will also soar to the moon. They will rise by at least 25% if Trump doesn't roll back his tariffs, especially in steel and aluminum. And if you are a company in the United States, you will be facing a higher cost of production, and your choices will be tough. Will you destroy your margins by absorbing the tariffs, or will you pass the tax to your customers and risk a collapse in sales? Both outcomes are extremely bad. And that's why the markets will likely continue to sell down in the weeks, in the months to come if Trump continues this trajectory. They just aren't pricing in the truth of Trump's tariffs yet. It's important we look at the situation and realize the US economy, which is driven by consumption, 70% of GDP, is in real trouble. Trump can deny it all he wants, but the fundamentals are collapsing.
Your comments the other day not ruling out a potential recession seemed to rattle the stock markets. The Commerce Secretary said there wouldn't be one.
Boom. Just so you know.
Just specifically on the recession.
Yeah.
Do you think there will be a recession?
I don't see it at all. I think this country is going to boom. But as I said, I can do it the easy way or the hard way. The hard way to do it is exactly what I'm doing, but the results are going to be 20 times greater.
This is the president denying that his economic war will cause a recession. Now, I believe he's wrong, especially if he decides to prosecute this until the bitter end. Remember what's coming ahead: reciprocal tariffs. This is a big one because now the entire world is involved. The US will block out imports from the world to shift production back home. Now, that's the game plan, but in doing so, the US economy could be hit with an inflation shock come April next month, and I don't think many people are prepared. These are the tariff gaps between Asia and the US. Let's use South Korea for example. On April 2nd, Trump could hit Korean imports with a 13.6% tariff to match theirs. Now, this sounds tough until you realize how dependent the US is on Korean imports. They buy a ton of electronics, appliances, machinery, and semiconductors from South Korea. More stuff in the US will cost more now. Computers, smartphones, and chips prices will be heading up. And that's just one country. Now extrapolate this to the rest of the world now. So you can see how big of a disaster this can get. And if you think the steel tariffs were bad, if you think hammering China was nasty, well, wait till Trump starts to clobber the world. That's when the real fireworks will happen. But what's crazy is how the rest of his administration doesn't seem fazed at all. Either they are all incompetent or they're actively pushing the economy into recession and they are hiding it. Now just listen to the Commerce Secretary. He is still hiding the truth about tariffs.
The price of aluminum and steel and copper has already started to rise. That could ripple through the entire manufacturing sector and raise the level of inflation. Could it bring on a recession?
So let's start again. Let's take a step back and remember inflation, right? Inflation comes from a government printing too much money. The Biden administration having a $2 trillion deficit. You don't get inflation from having a tariff, because what a tariff says is if it's made in Europe, if it's made foreign, it might cost a little more, but that which is made in America does not cost more. This concept of how about we buy American steel, we buy American aluminum. There's U.S. Steel, you know it, there's Nucor, right? There's Cleveland Cliffs. We make plenty of steel in America.
Yes, inflation does come from printing too much money. But inflation also occurs when you introduce tariffs on cheap imports coming in. Consumers have to pay more for the same exact product, and to them, that's inflation. Lutnick's solution is to buy things locally to push down prices. And even the host doesn't really believe what he has to say.
Domestic
we make plenty of
producers
steel in America. Let's strengthen that.
Domestic producers can't keep up with demand. The supply is limited, demand is strong. The price is going up.
Some foreign steel will go up for sure, but then they will build those plants in America. We will have our plant production in America is only operating at 55%. That's got to get up to 80%. We'll put the orders in America. Our plants will be more effective.
Once again, when you block away the competition, steel producers in the US have free rein to raise prices all they want. There's no cheap supply competing with them. So they could charge an arm and a leg, and unless Trump imposes price controls, which is another problem, it just won't work. And we really need to smell the coffee here. Trump today just confirmed his global tariff war on the major economies in the world. China, EU, Mexico, and Canada, they have all retaliated as well. So hang tight guys and realize we have just entered the storm. And unless Trump does a sudden U-turn and does it fast, the US economy has to brace for impact. But let me know what you think. Can the US escape a recession? And will the tariff war expand come April? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.